NAV Financing, an overview and strategic insights. Understanding the key aspects of NAV financing. Agenda overview. Introduction to NAV financing. Mechanics of NAV financing. Benefits and risks. Future of NAV financing. Introduction to NAV financing. NAV financing overview. NAV financing involves borrowing against the net asset value of a fund or portfolio, enabling liquidity for investors. Understanding net asset value. Net asset value, NAV, is the total value of a fund's assets minus its liabilities, crucial for assessing investment value. Collateralization factors. Collateralization refers to using assets as security for a loan, impacting borrowing capacity and risk assessment. Purpose and applications. Improving liquidity. NAV financing helps organizations improve liquidity by providing necessary funds for immediate operational needs. Funding new investments. It serves to fund new investments, enabling growth and expansion in various sectors such as private equity and real estate. Managing cash flow. NAV financing plays a crucial role in managing cash flow, ensuring that organizations have sufficient funds for daily operations. Comparison with traditional financing methods. Traditional financing overview. Traditional financing methods primarily depend on cash flow to assess the viability of investments and loans. NAV financing focus. NAV financing emphasizes the underlying asset value, allowing for a different approach to securing capital for fund managers. Opportunities for fund managers. The shift to NAV financing opens new avenues for fund managers by leveraging asset values instead of cash flows. Valuation methodologies, market comparisons. Market comparisons assess the value of assets by comparing similar transactions in the market, providing a frame of reference for valuations. Discounted cash flow analysis. Discounted cash flow analysis estimates the value of an investment based on its expected future cash flows, adjusted for time value. Asset appraisals. Asset appraisals involve evaluating tangible and intangible assets to determine their fair market value for financing purposes. Structuring NAV loans, determining loan amounts. The loan amount is calculated based on the assessed net asset value, ensuring it aligns with the borrower's financial situation. Interest rates consideration. Interest rates are set based on the net asset value and market conditions, affecting the overall cost of borrowing. Repayment terms. Repayment terms are defined to balance risk between lender and borrower, ensuring manageable payments over time. Risk exposure analysis. The structure of NAV loans directly influences the risk exposure for both parties, necessitating careful assessment. Key players and stakeholders. Fund managers. Fund managers are essential in NAV financing, making investment decisions that affect overall fund performance. Lenders. Lenders provide necessary capital and financing options, influencing the terms and conditions of NAV transactions. Investors. Investors contribute capital and expect returns, shaping the investment landscape and influencing market trends. Regulatory bodies. Regulatory bodies enforce laws and regulations, ensuring compliance and stability in NAV financing markets. Advantages for fund managers and investors. Enhanced liquidity for fund managers. Fund managers utilize enhanced liquidity to quickly seize investment opportunities and adapt to market changes effectively. Flexibility in investment decisions. The flexibility offered to fund managers allows for swift reactions to market fluctuations and emerging opportunities. Access to funding for investors. Investors can access necessary funding without the pressure of immediate asset liquidation, ensuring better financial stability. Potential risks and drawbacks. Valuation inaccuracies. NAV financing can be affected by inaccurate asset valuations, leading to poor investment decisions and financial losses. Market volatility. Market conditions can change rapidly, posing risks to NAV financing through sudden fluctuations in asset values. Potential defaults. Investments in NAV financing may face the risk of defaults, impacting overall portfolio performance and investor confidence. Risk mitigation strategies, regular asset valuations. Conducting regular asset valuations ensures that the value of assets is accurately reflected, helping to minimize financial risks. Diversification. Diversifying investments across various asset classes reduces exposure to risks in any one area, stabilizing overall returns. Strict lending criteria. Implementing strict lending criteria helps to assess borrower risk accurately, thereby minimizing potential loan defaults. Future of NAV financing, changing investor preferences. Investors are increasingly looking for flexible financing options that align with their evolving needs and goals. Increased competition. The market is experiencing heightened competition among different financing options, influencing pricing and availability. Future of NAV financing. Navigating the future of NAV financing requires an understanding of these shifting market dynamics and investor behavior. Technological advancements. Efficiency in NAV financing. Technological advancements enhance the efficiency of NAV financing, streamlining processes and reducing operational costs. Transparency through technology. Innovative technologies improve transparency in NAV financing, allowing for better tracking and accountability. Data analytics innovations. Data analytics innovations enable more informed decision making in managing NAV loans, enhancing risk assessments. Blockchain revolution. Blockchain technology could revolutionize the structuring and management of NAV loans, increasing security and efficiency. Regulatory considerations and predictions. Evolving regulatory frameworks. Regulatory frameworks are continuously changing, influencing the operations of NAV financing and other financial activities. Impact on NAV financing. These regulatory changes significantly impact how NAV financing functions and the strategies employed by stakeholders. Anticipating future regulations. It is crucial for stakeholders to stay informed and anticipate future regulations to adapt effectively. Conclusion. Understanding NAV financing. NAV financing provides fund managers with crucial insights into fund valuations and liquidity options in various market conditions. Benefits of NAV financing. NAV financing can enhance investment strategies by providing leverage and optimizing asset allocation for better returns. Challenges in NAV financing. While offering advantages, NAV financing also presents challenges such as market volatility and regulatory considerations that must be managed. Future trends. The future of NAV financing will likely involve technological advancements and evolving market dynamics that shape investment strategies. Thank you.